The question is savings bonds. Many times people, when a new baby was born, they buy them a savings bond for $25, and over the next period of time, it would grow to $50. Okay? You buy a savings bond today, it's like a CD. It's going to earn about 1%, 1.25%. There's something called the rule of 72, and let's be very optimistic here and say you're going to get 2%. You're going to get 2% on your savings bond. Okay? The rule of 72 is one of the most basic principles of investing. You take the number 72 and you divide it by the return on your investment, and the resulting number will tell you how many years it takes to double your money. So, if you have something that's yielding 2%, divide 72 by 2, it will take you 36 years to double your money. That's a long time. It's a long time. Here's what I'm going to suggest you explore. Okay, this is fun. This is one of my favorite things to talk about. There are many companies out there that have, publicly traded companies, that have what are called direct purchase programs, which allows you to buy the stock directly through the company without having to go through a broker. What's great about this is it allows you to invest very small amounts of money. Many of them will allow you to invest $25, $50, something like that. And even ones that have higher minimum investments, say it's $1,000, they waive the $1,000 and you commit to invest $100 a month for a period of time. So, we've done this, well, in all honesty, my wife and I use direct purchase programs to buy all of the stocks that we own. All of the stocks that we've set up for our grandkids have been done through direct purchase programs as well. And they're a very economical way to do this. And I'm going to tell you how you can learn about what companies have direct purchase programs, okay? There's a newsletter out there called DRIP Investor, D-R-I-P Investor, and it's not a comment about the personality of the investor, okay? DRIP stands for Dividend Reinvestment Program. And the newsletter is called the DRIP Investor, dripinvestor.com. Go to that website, ask for a sample copy of the newsletter. You don't need to subscribe. The guy that writes the newsletter is a good friend of mine, and he gets mad when I say you don't need to subscribe. But you really don't, okay? And they will send you, actually there's a couple of ways you can do it right online. And it'll probably instruct you to do that before sending it to you. They will provide you with a list of all the companies out there that have direct purchase programs, plus the contact information of how to get in touch with them and how to set up the account. It's extremely simple and easy to do. Very, very easy to do. And some of them have fees that might be a little expensive. Some of them don't. That's your job to take a look at that and which ones are right for you. But again, think about, I just look at for my grandkids, we're at a point now where we're starting to invest with them, but before we were investing for them. And so we bought the kinds of stocks and companies we thought that they would identify with. Our one grandson is very tech-oriented, and we bought it in Microsoft. Our granddaughter is a princess, and so both of our granddaughters are princesses, so they have Disney. Okay, so you can just kind of go with these kinds of things as well as a way to get started. I would much rather see you do that, because again, for a newborn baby, even if that's money just going to be there for 18 years till they start college, that's 18 years where, especially if pick one that pays a good dividend. And that dividend, it will reinvest those dividends for you into full and fractional shares. And it's just a real simple, great way to go. It's really a great way to go.